everyone, and welcome to Sphere of Success, the podcast that looks at challenge and adversity in business and how we alchemize that to see growth, development, not just within our businesses, but also ourselves. And sometimes when we look back, we think, you know what? What the challenge that I've just been through has probably been the best thing that ever happened. So let's hope that we look at that and we can move forward from our setbacks. And today I have the most amazing guest, Helen Tarrant. She is the author of 3 commercial property books. She is Australia's #1 commercial property specialist and is the founder and leader of buyer's agency Unicorn Commercial Property. After migrating from China to Australia as a child, Helen couldn't speak English, and her mum only had $70 to her name when she first arrived with her family into the country. After completing a Bachelor of Commerce and a Master of Laws, Helen founded a beauty therapy business, which she quickly realized wasn't going to provide her with the passive income she needed to live the life she dreamed about. Instead, she turned to commercial property and together with her husband was able to grow a single $360,000 investment into a $10 million commercial property portfolio, which is an absolutely outstanding achievement. Helen has gone on to write 3 books: Boost Your Cash Flow, Cashed Up, and 5 Steps to your first commercial property deal. Welcome, Helen. It's absolutely wonderful to have you on the show. I know it's going to be really insightful and very inspiring for our listeners and our viewers. So welcome this morning.
Thank you. Thank you. Nice to be here.
So, Helen, it would be wonderful if you could talk to us a little bit about your journey. You migrated from China and you have come to the country without speaking English. Your mum only had $70 to her name when she came over. How on earth was that early childhood something where you actually felt equipped to be able to go ahead and lead the life that you're now absolutely abundant and thriving and helping others to do the same?
I guess at the time I never thought that I would be here. No one actually started out thinking I'm going to be a commercial property investor. I don't think anyone starts that out and thinking that's what you wanted to do. But for me, it was the driving force was that my parents needed a retirement option, and residential wasn't going to get them there that fast because I guess by the time I came of age and was conscious about helping them retire, they were at that age where they probably missed out the 10 years they could have had where um, they could have bought property in the 80s, which didn't happen. And so at the time they were kind of like, we don't have time now to wait it out. So I needed a better solution. And that's how I ended up looking for that and finding commercial property. And that's really helped me in formalizing a system that everyday Australians can use to help them get to financial freedom.
Now, the interesting that you say that, and this is an international podcast, and we are focusing on Australia, obviously, because it's the Australian commercial property market. However, I think that anybody that is listening and thinking, how do I grow an income? How do I grow wealth? How do I grow my financial future or helping perhaps my loved ones to have a life that they've dreamed of or your children to go to college, whatever it might be? I think this is very translatable across the world because when you can do it once, you can get a formula and you can do it again and again. So I'd like to now delve into how you started, because it's not necessarily from a beauty therapist business. It's not naturally the segue that you might think of. So how did you get started and how did you gain your knowledge in the first instance?
Well, I got started in commercial property because I was a beauty therapist. And when you're a beauty therapist, one of the interesting things that you notice is people, you're pretty much dealing not only with the public but with all of the tenants that's on the same street as you. So you get to see a dentist, you get to see the lady who has a cafe next door, you get to see etc. etc. So you get to see all of them, lady who owns the sushi shop, the hairdresser, and you're doing their waxing on their facials, and you're having a conversation, and you're finding them a really interesting. Um, they're really great tenants. They are responsible. They pay their rent. They take care of the premise. And you go, well, it'd be really great to be their landlord, right? And so this is how you started thinking about commercial property. And you were a great tenant. And when I was a great tenant, I thought, well, I would love to have me as a tenant because I pay rent all the time and all of these things. So and that's what got me thinking about commercial property. And at the time, there was literally no information on commercial property. And as a result of that, I developed out a system to invest in commercial property, just based on trial and error, what I did.
So, with the challenge that we're talking about in business, and people would say, well, that's all right for you. You've got a business now, but I've got no money. I want to be abundant. I want to be able to have a life that I've always dreamed of. But how do I start when I really don't have hundreds of thousands of dollars to be able to get an investment?
So in there's if I had nothing tomorrow, if I lost everything tomorrow, the one of the things that I've learned is that the knowledge of how to put a commercial property deal together will be the knowledge that you need to start out again. Just that knowledge and understanding and pinpointing deals, right? And then you hustle. You got to hustle. You got to hustle. There is so much money out there from people who have a lot of money but don't have a lot of time. So they could be the doctors or the high net worth, people who've cashed out of a business. They just don't know what to invest in as the next deal and they don't have time to assess it. If you could be that young person or that person that comes to them and go, hey, I've got a deal for you. This is how it's going to work. This is the process. This is what I'm going to do. This is what I'm going to get. This is what you're going to get. Clearly spelled out to them. Clearly read out, clearly go through all of this with them. Then uh, there's heaps of people who are willing to put together for a deal. And that's how you get started. With no money, you can have a carried interest in a deal. Yeah.
So you don't have to be rich to start with to be able to get into commercial property. This is what I'm hearing. It means that you need the energy, and what you've touched upon is the passion to learn the business, to be able to speak to people about it. Now, here's another challenge that I'm going to put to you because I think it's very interesting to think about people's views. I know I would be thinking that is, okay, I can learn through Unicorn Commercial Property and all the trainings that you provide, but I've got no prior credentials. I haven't had a track record. How do I build that track record and build that credibility so that I can talk with people and that they trust what I'm saying to them?
Yeah. So this is interesting because trust is one thing, but the credibility comes from showing people that you know what you're talking about, right? So one of the things that it's when I first started, I didn't have a track record. And next time I'm building a product, I don't have a track record, but I've done it myself, right? So all you can do is showcase what you have done in the past and or showcase other examples of deals like that has become successful. There's plenty of commercial deals that became really, really successful. That may not be your own deals, but you could showcase to an investor why those deals became successful. With any investor, it actually doesn't start with give me some money because I've got the best deal in the world. It actually starts with educating them. Every single investor needs to be educated as the value you can bring to the table and the value of the deal. So you have to demonstrate by example. And in property, the great thing is there's always an example. So you could demonstrate that. And if you can demonstrate that, then you're really on a home run.
And so when you're going out and you're thinking, right, okay, I've perhaps been through your training. Other training providers are available, but I know that you're Australia's number one in what you do. So I always say go with the best because that's got the reputation. And I would also say that the people that you meet on these types of programs as well, from a networking perspective, can
Yeah,
actually be just a type of cohort of people that can give you so much
that you
value
need.
from
Yeah,
actually attending something where you're looking at the best in their particular sector. I'd always say surround yourself with the best in what you want to do in your field. So when you're going out there, what makes the constituent parts of a great commercial property deal?
Look, there's some fundamentals about a commercial property deal, and a lot of that is about understanding your foundation. So, what does the market consider as value, right? You don't get to define what's value, right? And this is where investors make the, the mistake is they think it's valuable, but the market doesn't think it's valuable. So, what does the market value? And that's pretty easy to define. You go to watch auction houses, you watch um, the sales of properties, and the one that sells the most at the highest price is what the market values. There's elements of that. And so if the market values this type of property, then for example, medical center that's freestanding in metro with a long lease, then you got to look at how do you find a property that will ultimately that you can engineer to match the value of the market. And if you can do that, that's your winning formula.
And if you are an investor, because somebody here might be looking and watching this podcast and thinks, well, I am that person. I like to call it cash rich and time poor. I'm in a situation where I have maybe had a retirement payout, maybe I've had a property sale, maybe there's been a windfall of whatever it is, maybe an inheritance. And actually, you know what, sitting in the bank, it's not really doing that much for me. How can I make that money work on a sustainable way and within the risk profile that I'm looking for? What would you say to an investor when somebody approaches them? Because I'm sure there are good actors and there are bad actors out there, like there always is in any kind of sector. What should an investor be looking out for from a person perhaps that approaches them to go into a deal like this?
So a personal approach it. So if someone comes and pitches a deal for you, you've got to look at whether they've already built contingency plans in that deal, whether it's been de-risked, whether they have built in a buffer, whether they've have big picture goals, and how accurate is their research. So, for example, um, someone comes to you and says, yes, I want to buy a group of shopping centers, uplift them, and then sell them back into the market at a higher price. Well, they have to be able to provide you evidence that those rents are going to come in. There's a demand for different tenants to come into that property, that the market have been growing the last little bit, and that the new sale price that they're going to achieve for you has been demonstrated. Right? So there has to be evidence for you as an investor um, that the person pitching you is producing, right? And that's the most important thing is that you look at it's an evidence-based um, decision. It's not about how much you love it.
That's really important, I think, to be ruled with your head and not your heart, because that's
It's
one
very
place
hard
where
to do.
perhaps they're very, very, when you've got your heart, they say, when you've got your heart set on something and you think, oh, I want it at all cost. Well, actually, that could be the biggest albatross, it's the biggest mistake you could make. It's actually looking at things logically and drilling down into the detail, because I'm a great believer that the devil's in the detail. And the more that you know something to be factual, that you can back it up with, as you saying, that hard evidence as to say what you're getting involved with. That's really important. Um, Now thinking about somebody starting again from looking at commercial property, would you say that it's good to start from, say, the smaller deals, or would you say that the way that your training is provided, that people can start to look at the more higher end deals from the start? How would you advise somebody on their training journey?
So the the trainee journey in terms of how they would start, it would be buy the best property you can in your price bracket. Don't try to go a lower price bracket. Try to move up the ladder. Everyone makes the mistake and goes, okay, so I have a so I could buy a property at 1.5 million, but I'm going to just be conservative, buy seven to $900,000 property. That's a wrong decision because you've just put yourself into the most competitive market versus the non-competitive market. right? So that's what I mean about when you look at something like that, you want to be um, looking at it from a point of view of what's the best deal I can get for the amount of money I can have right now, because you want value for money and you want to be able to have something that is not going to fail in 2 years' time, but will consistently deliver value in the 5, 7, 10 years in the future. If
And
that makes sense.
yeah, it does. What I'm thinking about with the ever-changing world that we live in, have you found that there is a difference between the predictability of the commercial property world? Is it considered to be volatile and changeable, or has it had a trajectory that is relatively stable?
Look, I think there's always black swan events, and I think in commercial that you are prone to those black swan events, and they happen around Australia. So different parts of the world, different parts of the state could have a lull, while other people pick up. That's quite normal in terms of commercial, but definitely it's something to look at in terms of building out strategies to safeguard against those things as well. That's really important, and a smart investor will think ahead to that. And there's things you've got to understand as an investor that it's not controllable. No matter what you do, you can ask all sorts of DD questions. You can just go crazy with your analysis, but there's going to be events like no one saw COVID coming. People saw the GFC coming, then no one saw COVID coming. Right? And there's going to be other things like that that will knock us out, right? And so you just have to be prepared that if this doesn't work out, what is it that you can do?
And just to let's go back to basics, and people will go, well, what is a commercial property? I know it might sound obvious, but in some instances, commercial properties can be residential properties. So, if you wouldn't mind, just take us through a little bit about the main sets of what defines a commercial property.
So a commercial property is not a boarding house, is not co-living. It is not a residential property that has a longer lease of 3 or 5 years to like a corporate tenant. These are not commercial properties. It's not a block of units. They're not commercial property. A commercial property is a warehouse, so industrial. It is an office, so a whole level, one suite. It is a retail shop. It could be a shopping center. It could be a medical center. It could be a childcare. It could be petrol station. These are all commercial. It could also be a mixed tenancy where you have a warehouse at the back, office at the front. You could have office above, retail down the bottom. These are your commercial properties. There could also be a residential converted to maybe a medical center, a dentistry, a vet clinic. Those are commercial properties.
And would you help with training if somebody's thinking, you know what, this property, we call it in the UK a change of use. So
Mm.
when you're looking at property as, say, sourcing that property deal as somebody who wants to then look for investors to take on that deal, when you're looking at
Yes.
properties, do you consider something and the potential at the moment it might not meet the commercial classification per se, but might have
Yeah.
a change of use to get there?
Yeah, absolutely. Because change of use becomes so, it comes important when you're doing an uplift. So someone wants to create more value in their property or in property portfolio. So let's put it this way, a property that is a hairdresser or a beauty therapist, and it's fine. It delivers a certain value. It's the market sees it as it's safe enough, but it's not the best tenant. So they're going to value it as, okay, we want a slightly higher return. Now that tenant vacates and you put a dentist in there who spends 400K on fit out. It's a beautiful premise, fitted out. It's got 3 rooms, got like 5 dentists working there. All of a sudden, the value of that property doubles because that tenant has brought value into that property and you've changed the use. You've gone from this retail use to a medical use. Now you've changed that use and now your property have increased in value, but probably also increased in cash flow as well.
And thinking about the training that you provide, what would you say that your differentiator is to the others that compete in your sector?
I think the main thing about the difference in a commercial in what we do is about the holistic approach. So when you look at commercial property, a lot of people think, I've got 500K, just buy something, I've diversified, I've got the money, let's go. That's not the point. The point is actually about going out there and looking at how much income do I want to replace? Really, really big picture. Right? How much income do I want to replace? What is it that I want my portfolio to do? What's my timeline? As in, do I want to replace 500K in 3 years' time, and I'm only starting out with a base of $50,000? Well, that's not possible, right? But if you are a doctor or a high professional and you're earning 500K and you're starting with 50,000 and you want to replace 500,000 passive income, you want to do in 10 years, that's absolutely possible. It's just time and what you want to do. And that's built into developing that crystal clear vision. Then the education comes in to give you the idea, the strategy, that all of the levels underneath that so that you can build the blueprint, and then you can execute. Because so many people just execute and they have no plan. So you don't know if it's meeting your specific goals. But if you had a blueprint first, which is what the education teaches you and the coaching and me mentoring them, then you know if it's going to meet your goals. And you know what that first property looks like.
That's interesting. So you help somebody to map out what that first property is going to look like as far as the rules
Yes.
of engagement. I've done financial trading and I've dealt with property, and it's always
Yeah.
the rules of engagement and the rules of exit so that you know when you get in
Yes.
and you know when you get out. Um, why would commercial property offer more opportunity for wealth creation than what you've mentioned, say, residential?
So for me, the difference with that, with the commercial and the residential, is that the the commercial side allows you to build a portfolio not reliant on you, which is really, really important when you're trying to grow. Whereas residential is reliant on you, which means that when you are actually trying to grow, it becomes much harder because unless your income increases substantially, you're not really going to you're not really going to um, be able to grow exponentially because everything's depending on how much you earn because you have to service the debt. But if you don't have to service the debt, then it becomes so much easier because once that property starts to produce income, it's self-sufficient. You keep letting it roll.
Okay, so I just would like you to unpack that because I'm still a little unclear. You mentioned servicing the debt. So when you're in, let's say for instance, you're the person that's finding the deal, you're the sourcer here, and then you're putting
Mhm.
it to an investor.
Yeah.
How does that long term, when you look in an investor, how does that help you as a sourcer? What's the dynamic? I want to know who is owning the property and who's getting the regular income out of this.
Okay, so there's a couple of parties that be at play here. So firstly, let's say you're a client who's looking for a commercial property. So you start out, you come into the unicorn community, and we build out a pathway for you. So we do big picture, we do strategy, property profile, blueprint. Like we do all of that for you. Once it's done, we help you execute. We go and find the property. At the same time, you're setting up a trust structure, so you can house this property deal. You yourself lend the money to the trust, so the trust itself effectively owes you the money. It's an asset protection way of doing it. The trust itself then goes and takes out a loan for the actual property. Let's say you're buying $1 million property. Effectively, the trust has no assets. It's got $1 million. 300,000 came from you. 700,000 came from the bank. It owes everybody $1 million, right? And there's a loan, there's a lease on the property, which might be $60,000. So the tenant, so the building you're buying has a tenant in there. It's got a lease. The tenant's paying $60,000 a year. Now in commercial, the tenant pays 60,000 plus outgoings. So what you get as that 60,000 is that net, right? You've borrowed $1 million to buy this $1 million property. This $1 million attracts an interest rate. Now the interest rate might be 6%, might be 5.5%, might be 6.5%. So in this sense, you've got $60,000 from the rent from the property to service the interest that it costs to hold that property. And often it could break even or it could be a little bit more. So let's say your overall interest rate might be 5.5%, then you're making $5,000 after you pay the interest and everything else. Let's say your interest is at $60,000 a year or 6%, then you break even on the deal. But at all of this time, none of this requires you to put additional money into the deal. Everything's the property has been able to service everything, which means that you can buy this property and not worry about you having to find the extra money to service it, not worry about you having to grow at the income or do anything. You basically become set and forget and let it just churn over. And it will just take care of itself. In time, it will grow both the cash flow and the value. You can refinance, put out some more money, buy your next one. So, that small snowboarding effect. Yeah.
Interesting thing in the UK, and let me know if it's the same in Australia, is that you have full repairing leases. So actually, the tenant in the UK, there are leases where the tenant is subject to actually keep the maintenance of the building and everything for themselves. It's their remit. The tenant takes that liability on. And in the UK, that's why a lot of people like the commercial property route, because as a landlord for residential, you're liable for all of the maintenance of the property, etc. But in some instances for leasing, you actually have those leases, which then means that the tenant actually pays for the maintenance of the actual property, of the fabric of the property. Is that something that happens in Australia as well?
Yeah, so we would do a little bit differently in Australia. So the tenant does take care of your property as if it's their own. The tenant is responsible for the maintenance of the general property. So they come into a property, they do a fit out, they take care of the property and the fit out that they've put in. You're not responsible for that. But if there was a major capital works, you as the landlord is responsible for that. So let's say that the toilet is broken, that's the tenant's issue. But if the downpipes outside of the building is broken or the roof or the guttering is broken, then that you as a landlord is responsible for that. So like air conditioning is a very good example. Air conditioning maintenance, the tenant maintains it, but the whole air conditioning itself breaks down, the landlord has to replace it. So that's the difference here in commercial property.
That's an interesting one because I would have thought that is a bonus because if you own residential property, anything that goes wrong in that property, and you just mentioned the loo or something like the air conditioning, in usual circumstances in the UK at least, it's the landlord's responsibility, and you have to deal with everything on that score. So it's an interesting option. And with regards to interest rates in Australia and your economic situation. How are interest rates looking now? Obviously, we don't have crystal balls, and I'm not a financial advisor. And as I say, we're not giving advice here. But from your overall view of things like borrowing rates and the access to borrowing and the proclivity for borrowers to say, yes, we want to fund good deals, how's that all looking over in Australia?
In Australia, basically, in look, there's always going to be some difficulties finding properties at that lower end. But in terms of interest rate, we've had a couple of rate cuts. We're here at probably sitting around that 6% mark for a commercial property interest rate. And that's quite appealing for people to start jumping back into the market. Uh, we're anticipating that next 12 months, probably another two rate cuts. So that's probably going to bring us to a mid 5 level, which is again quite appealing.
Mm. And is it a competitive market to actually start your journey in the commercial property sector?
It definitely has become in the last couple of years. Before that, it wasn't so, but now it's definitely become more like that.
So you're
It's just
finding
more and
more
more people
people.
want to diversify. Yeah.
Yeah, yeah. So that's also, I would say, to advocate really great training because those people that just think they're going to have a dabble, if you've invested in really good training, to my mind, then that sets you apart from the people that are just going to see if they can make a quick buck or two. And also, in all these things as well, it's a big investment. It's a major undertaking and not to be taken lightly. And so, good training, I always think, in anything that you're going to embark on, especially if you're relatively new to this particular type of opportunity, is to have fantastic training. Is there anything else as we come up towards the close of the podcast, Helen, that perhaps you'd like to discuss that we haven't touched upon?
Look, we well, we spoke about pretty much everything that's really important, but I guess as a starting point, if you're looking at getting into commercial, it's really important to find the right people, surround yourself with a team, because commercial property is a team sport. They're going to give you better access to deals, they're going to mentor you, they're going to see things you don't see. And so they're going to help you move faster, even though in the beginning, when you're assembling teams, seems a bit slow when you're working on strategy. But once you've got that down pat, you can go bang, bang, bang into it, and that makes it go faster. And that actually helps with you building wealth faster ultimately. So really invest in Australia, invest in building your team, and that's going to help you and leverage you, and I guess going to pay dividends a lot more in the future.
Well, thank you. And that's what, again, I would say with Unicorn and the training that you actually provide. You're doing this in group scenarios. You can build a community together. And I'm sure that there are lots of people who are the alumni and the current delegates within your training that are actually
Yeah,
finding that within those groups, as I alluded to before, that there are a lot of
yeah,
people that are actually helping to support one another and actually build their power team, as I like to call it, when you're actually dealing with those sorts of things. And the other thing is as well, as life throws curveballs at you and you've got questions, etc., to have a community behind you where you can actually ask questions, maybe after the training, that you feel that you've got your hand held. What's your kind of ongoing support for people?
so we have fortnightly webinars that people can attend. We do boot camps, events. We have lots of things going on so that everyone can feel they're connected to each other, but they're growing not in isolation, but together. And there's someone monitoring the market and what the market is doing.
Fantastic. And Helen, how can people get hold of you?
So you can check us out. HelenTarrant.com is the first place that you can find out more about me, or unicorn.com.au to find out more about the company. So reach out to us, connect to us there. You can. We've got us on Insta and social, myself, but also, drop us a line off that website.
Fantastic. And as I say, we've concentrated on Australia today, and Helen is dealing in the Australian market. However, there are the commercial property throughout the world is always an interesting opportunity for people to look at. It's an opportunity to create wealth. Obviously, there's the upsides and the downsides as well. Make sure you do your due diligence before you get into anything where there's money involved and transactions to be had. It's not something to be taken lightly. And what I would say is the great thing is with Helen as number one leading commercial property specialist in Australia. And Australia is a big country. I think that that's saying something really extraordinary to her specialist skills. And don't forget where Helen came from. So if you're thinking, I'm new to Australia, I can't really speak the language, I haven't got much money, things seem to be against me, I'd really love to provide for my family and have an abundant life. I think Helen is very much a person to actually speak with because she's walked the talk. She's a living example that you can really achieve your dreams no matter how hard your start is. So thank you so much, Helen. It's been a real
Thank you.
pleasure to have you on the podcast.
No, it's been great to be here and just giving you a little insight in what you can achieve.
Absolutely, it's limitless. It's the sky's the limit. So that's fabulous. Thank you. And to everybody listening, thanks for tuning in. It's great to have you. We wouldn't be here without you. Do like, comment, subscribe, and share because I think this could be absolutely ideal for all sorts of people that you know, that you feel, you know what, that would really, really ignite somebody and yourself as well. So until next time, be successful, and we'll see you all again very soon. Bye bye now.
Yeah, bye. One.